So let's go ahead and get started. And if at any time you are having a hard time hearing me or my screen isn't moving, just let me know and we can get it fixed. All right. So my name is Kathryn Stotts. I am actually here with TruHome Solutions, and TruHome is the full service mortgage partner to Alltru Credit Union. So we do everything mortgages, everything from start to finish. We even service your loans at the end and retain your servicing. So if you've ever heard of mortgages being sold or your servicing changing all the time, good thing is that will never happen. We hold them here for the life of the loan as well. And we're located not too far from you all. So we're just over here in Kansas City. So I know that you all are in the St. Louis area. I'm from St. Louis. I love it. Just moved over here a couple of years ago. So let's go ahead and get started. Enough about me. Really, I just wanted to highlight the key benefits of home buying. So whenever you are purchasing your home, you should really know that it's just an investment. For example, here, the average annual appreciation rate is 5 to 6% nationally. So even at 3%, a home purchased for $150,000 would grow to a value of roughly $364,000 in 30 years. So that's almost $215,000 of equity that you would have. Not like your money can do that in the bank. So that's why it's really important that whenever you are looking to buy a home, that you take your time, find the right one for you, and don't rush into it. It does take time. It's a big decision to make. And I'm sure, as many of you know, the cost to rent is continuing to increase. So rather than paying your landlord or someone else, you might as well be putting that money towards a home that you actually own. All right. So really today we are going to go over the 6 main steps of home buying, and let's just go ahead and jump in. So step 1, getting pre-qualified. It's really important to be pre-qualified prior to making an offer or signing a contract on a home. A little bit about the process. So the pre-qualification process starts once you speak with a trusted lender. So you're going to speak with your loan officer. Your loan officer is going to ask you a variety of questions about your long-term, short-term goals, your budget, what you're looking to do, what type of home you're wanting to buy, and how soon. I will tell you, there is no one-size-fits-all for mortgages. There's actually a lot of different mortgage options. And what they're going to do is get all these questions together and then present you with a couple of different options. And then you can decide from there what you are most comfortable proceeding with. So once they've asked you all the questions, they're going to go ahead and get the pre-qualification process started. So what they're going to do is ask you about your personal information. So that's just your name, your address, your phone number, things like that. They're also going to ask you about your income and your employment history. So of course, income is a big thing when it comes to being pre-qualified. And then they're also going to have to access your credit report. Now, credit, we will get into a little bit in these upcoming slides. It's really important in the mortgage pre-qualification process, in the process as a whole. So we'll get into that, dive in deep in just a few slides here. So really, once they have your income, your assets, everything tightened down, they're going to see how much they are able to get you pre-qualified for, remaining again within your comfort zone. So say, you're looking to max purchase price is $250,000. They can get you a pre-qualification letter for that amount. So I will tell you, once you are pre-qualified, the pre-qualification process is based on all of the information that you've provided. So throughout the mortgage process, really our goal is to then document all of that. So if you're looking to purchase rather soon, the loan officer is going to ask you, okay, go ahead, send me your W-2s, send me your tax returns, send me your account statements, any income asset documents that they might be needing, and so on and so forth. As I mentioned earlier, there is no one size fits all. We do have different options. So we generally lend on conventional loans, but we do also offer FHA, VA, and USDA. I'm going to be speaking mostly about conventional loans today, but But if you have any questions about the others, just let me know. We'll go into a little bit more detail in the upcoming slides as well. And as I mentioned, it's really important to be pre-qualified prior to signing that purchase contract or making an offer. The reason being is you do not want to be in contract for a home that you might not actually qualify for. You do have your money on the line, and the last thing we want to do is for you to lose that. Okay, I'm going to pause here for just a second. I see we had a couple more join. Just want to make sure everyone can see me, or excuse me, see my screen and can hear me okay. You have a chat box. Let me know if you have any questions and I will stop and answer them. All right, no questions so far. Let's keep going. So as I mentioned, credit score is really important. When we pull a mortgage credit report, we are going to pull all three. So we're going to pull Experian, TransUnion, and Equifax. Those are the three big credit reporting companies. I'll tell you that we don't take the high score, we don't take the low score, we actually take the middle score for qualifying purposes. So we'll take that and base that middle score for your rate, pricing, mortgage pricing, mortgage insurance pricing, I should say, and so on and so forth. So do know that there are differences when it comes to a consumer credit report and a mortgage credit report. On average, you will see a consumer credit report roughly 20 to 30 points higher than you will a mortgage pull. And those consumer credit reports, what they are is they generally are just looking at one of these credit reporting companies. They're not taking into factor all three of them. Generally, you'll see this consumer credit report on like a credit card statement or maybe on Credit Karma. Just note that whenever you are looking to get a mortgage, your credit's going to show up about 20 to 30 points lower than what you're seeing there. And credit ranges, from 400 to about 850. So I will tell you that your credit score minimum for a mortgage, a conventional mortgage, is 620. Of course, the higher, the better. If you can be anywhere over the 700 mark, I would say that's probably going to be best. Whenever you're, around 620, maybe 625 or 630, it's pretty tight. So we have to have everything perfectly fall in line in order to get full mortgage approval. So just be aware, if you're kind of holding off, working on your credit, that's fantastic. I would highly recommend you making sure that your credit score is over 700 before applying, because it is going to show up lower on a mortgage pull. And then credit challenges, they're common. Just note that collections, judgments, foreclosures, high card balances, it's pretty common. It does take roughly 5 to 7 years for any negative credit history to go ahead and fall off of your credit report. Now, if you have like a bankruptcy or a foreclosure, that generally takes up to 10 years for that to fall off of your credit report. All right, any questions pertaining to credit? I'm going to stop here and make sure I don't have any. All right, none so far. Let's go ahead and keep going then. So the nitty-gritty of how much you need to buy a home. So whenever you're looking to purchase, do know that you have three main things that you're going to need money up front for before you actually get into the home. The first one is going to be your earnest money. Now, as I mentioned, you have money on the line once you are in a signed contract with the seller. So once the seller accepts your offer, you put down what's called earnest money. Now, that's a deposit on the home. So it's generally between $500 and $5,000. And what happens is the seller takes their home off of the market and says that it's a pending offer, or the contract is pending, whatever that might be. And basically, they don't really show their home. They're not really, nothing's really happening. They're waiting for you to have your financing together and close on the closing date listed in the contract. So if for whatever reason you do not meet that contract date or you don't get financing approval, then you generally will lose that earnest money and the seller keeps it. I can't say that that's overly common, but that's something that your agent can explain to you more in depth. And as I mentioned, it differs depending on the price of the home. I would say anywhere from $2,000 to $3,000 is most common. Now, your down payment, of course, down payment's a big one. Depending on the loan program that you are with, your down payment minimums change. So down payments range anywhere from 0 to 5% for your minimum. I will tell you for conventional loans, your minimum down payment is 3% of the purchase price. FHA is fairly common as well. If you are a first-time home buyer, minimum down payment is 3.5% of your purchase price. So for simple numbers there, $3,000 on a $100,000 home or $3,500 on a $100,000 home. That's just your down payment. Also consider closing costs. So closing costs are those costs associated with obtaining the mortgage. So they're just title company fees. There's a lot that goes on to, in the behind the scenes, to retitle that home, make sure that you are the new homeowner, all the paperwork's in line, and so on and so forth. So just know that that's your closing costs, and know that your down payment and your closing costs are due at the time of closing whenever you do close on your home. So you'll take your, generally it's a cashier's check that you'll take to closing with that amount. We'll get into a little bit more of that towards the end here, but let's keep going here. Okay, so down payment. Most down payments do come from a personal savings account. I'll tell you that's the most common, but it can come from other places as well. So you can receive a gift from a family member, and I should say you can also receive a gift from a very close family friend. You can take money out of your 401k. There are down payment assistance programs, different grants and things like that, but I will tell you the most common is gifts or savings accounts. Like I said, 401k, never a bad thing to do that as well. It's whatever you're most comfortable doing. Okay, so step 2 in the process. Once you have had all your questions answered by your loan officer, you're really ready and you're comfortable, you have your pre-qualification letter, the next step is to go ahead and go shopping. Now, this is really fun. This is when you get your agent involved and you get to look at all the available homes. So here's just some fun statistics about the first-time home buyer. So the first-time home buyer average age is 32. And generally the first step taken by a home buyer is to look at properties online. You like to kind of get an idea of what's available in your area, your price range, and what you can afford with your budget. So it takes about 10 weeks to find the right home. Now, everyone's different, so don't compare yourself. And do note that most buyers, especially first-time home buyers, are going to use an agent. Now, the great thing about being a buyer and having an agent is that generally the agent is paid by the seller. So there's generally a buyer's agent and a seller's agent. Generally, the seller is going to pay for both of them. Not always, but I can tell you that's about 95% of the time the way that it happens. And they're going to really walk you through this process. They know what's going on in your area, what homes are selling for, what's a good purchase price, and so on and so forth. So that's when you really want to lean on your agent to walk you through this part of the process. Okay, so once you find the right home for yourself and you have submitted an offer and it's been accepted by the seller, you have then a signed contract. So your loan officer is kind of sitting in the background. They're just waiting for you to have that signed contract. And once they have that signed contract, you would just send it right on back to your loan officer, and that's going to tell them exactly how to set up the loan itself. So once you have that contract, send it right on over. They're going to get everything updated on this side. And then they're also going to ask you for those account statements that you might not have sent earlier. So they're going to ask you for the statements that show your down payment funds, an ID, your income documents, your W-2s, possibly tax returns, so on and so forth. So they're going to ask you for all of that, and they're going to send you your disclosure documents. So those disclosure documents roughly 30 to 40 pages, just saying, here's all the ins and outs of the mortgage, here's what you should know, here's what your payments are going to look like, and how much it's going to cost. So give them a call. They will walk you through all of that. We are able to do that electronically, of course, or we can FedEx it overnight if you prefer to have it in paper, whatever is best for you. It's all the nitty-gritty, not so fun stuff, but really important. I'm going to stop here for a quick second. Any questions so far in this process? Okay, none so far. Let's go ahead and keep going then. So once you have your signed contract and you send your disclosures back, so I missed a step here. I should tell you, your loan officer is going to send you all of these disclosure documents. You'll have to sign them all and then send them back. Once we have your signed disclosure documents back, that's really when the behind the scenes process starts working here. So we will set up an escrow account. An escrow account is an account that is set up to make sure that your taxes and your insurance is always paid on time and in full. So an escrow account is established by your lender, and it's required anytime an individual puts less than 20% down on a conventional loan. So basically, it's of no cost to you. It's basically out of sight, out of mind. Your lender on our side, we're going to take care of your homeowner's insurance. We're going to take care of your mortgage insurance and your taxes, making sure they're all paid on time. I highly recommend it. I will tell you that this is set up at closing, and it looks like a closing cost, but there's always a cushion that has to be in your escrow account at the time of closing. So throughout this process, we're going to collect 12 months homeowners insurance. And what this does is that 12 months protects you. So say you're at the closing table and you just closed on your brand new house, you are driving there, you're gonna go move everything in, and you pull up and the house is on fire. Well, the good thing is you're already covered. So just note that the escrow account, it seems like closing costs, it seems like a lot of money up front, but it's really just to protect you for your homeowner's insurance and your taxes. Again, out of sight, out of mind, I highly recommend doing it. Your loan officer can kind of walk you through a little bit more what that means as well. So here's that step 4, you sign and return your disclosure documents. Once you've signed your disclosure documents, again, we have that escrow account set up for you, and we're going to go ahead and ask you to order your appraisal. So the appraisal is done by a local appraiser, and basically this is just to protect you as the buyer and us as the lender. So we want to make sure that the home that you are buying is actually supported, the value is supported by it. We don't want you to get into a home that, you know, maybe you're purchasing for $200,000 and come to find out it's only worth $175,000. That's exactly what this appraisal is to protect you and the lender as well. The appraisal fee, I will tell you, is paid up front. It is not paid at the time of closing, and anticipate somewhere between $400 and $500, about $450 is the average appraisal cost. So just be aware of that as well. And I will tell you, it is required anytime you buy a home. Looks like I have a couple questions here. Let me make sure. How long do you have to pay PMI on FHA or conventional loans? Great question. So PMI stands for private mortgage insurance. It's also something that is in your escrow account. On conventional loans, you have private mortgage insurance anytime you put less than 20% down on the home. Now, this mortgage insurance is just to protect us in case you default or foreclose on your home. It does fall off automatically on conventional loans once you've reached 22% equity. So once you've paid down your loan by 22%, I should say. Now on FHA loans, it's a little bit different. It's actually called MIP, Mortgage Insurance Premium, on FHA loans. Anytime you put less than 10% down on an FHA loan, you have mortgage insurance, which is paid monthly, I should say, for the first 10 years. It does not fall off for 10 years of the home. I will tell you, generally, mortgage insurance is going to be cheaper on conventional loans. So just note there's mortgage insurance on FHA and conventional, generally cheaper on conventional, and it does fall off just at different time periods. Great question. Okay, so step 5, once you have all your disclosure documents ready, you have sent in everything that you need for loan approval. Loan approval is provided by the underwriter. So basically the underwriter, what they do is they look at all of those documents that you've sent in, all of your tax returns, your W-2s. They're going to look at everything line by line to make sure that you are fully approved. Again, the last thing that we want you to do is get into a home that you might not qualify for or might not be best suit for you. Do know that approximately 20% of home buyers experience bumps in underwriting. So the underwriter might ask you for additional documentation. That's totally normal. Underwriting takes about 1 to 2 weeks to get through. So really the process at the beginning is pretty quick, and then this is a little bit longer of a process. There's a lot of behind the scenes work going on our side, just making sure that everything's good to go. And we're also going to look at the contract and the appraisal. We want to make sure that the home is sturdy, it's sound, it's safe, and so on and so forth. So that's also happening at the time that the loan is being underwritten. Once you have loan approval, really your loan application is sent over to closing, and your loan officer or your loan processor is going to reach out to you and tell you exactly how much you need for that cashier's check or that wire to bring to closing. They're going to send you your final closing disclosure. Again, that's going to be pretty similar to like your disclosure documents you received at the beginning, but it's going to tell you here's the exact numbers, here's exactly what else we need for you for your down payment and your closing costs, and your exact mortgage payment moving forward. I know I went through a lot. I still have a couple more slides here, but I want to stop and make sure that I have all of your questions answered before moving forward. Okay, doesn't look like I've had any more come through. Let's go ahead and keep going then. So how to apply? As I mentioned, the first step in the process is being pre-qualified. You want to speak with a loan officer and a trusted lender about your long-term, short-term goals and your budget, so on and so forth. Now, you can feel free to call us at this direct number, this 888-275-4957. This number, we have loan officers about 40 to 50 sitting in this inbound call queue waiting to answer your questions. I will tell you, they are there from 7 a.m. to 7 p.m. So you have a 12-hour window to give us a call at any time. Your call is picked up in about 10 seconds, and maybe you're not ready to buy just yet. Maybe you just have some questions about your credit, how to build it, really what to expect. That's okay. Give us a call, ask your loan officer. They will give you their direct contact information as well, so that whenever you are ready to buy, you're more than welcome to reach out. Now, you can also apply online. Of course, through Alltru's website, there's a drop down for the Mortgage Center. This is a direct link there. You can also view the rates and so on and so forth there. So feel free to go there anytime. You can click the Get Pre-Qualified button. It's going to ask you a couple of questions, or you can fill out just your name and contact information, and a loan officer will reach out to you, whatever you're most comfortable with. Looks like I have a couple of questions. Let me make sure that we get these answered. How long does the process take from start to finish? Super great question. The market, as you guys know, is totally crazy right now. So I will tell you that the average closing is between 30 to 35 days. I'd say 30 is most common. So it takes about 30 days from start to finish. And the first, I'd say, week or so is really crazy. The hardest part is really just getting all of your documentation, digging out that W-2, digging out your pay stubs, things like that. So if you know that you are ready to buy here really soon, I would say get all that together and then give us a call. We can get you pre-qualified immediately and go from there. So 30 days We do know we need 30 days from the time that we have a signed contract to the time that you can fund. Yes, totally crazy. We can also get you pre-approved. So if you have those documents up front, the pre-approval and the pre-qualification process are very similar, but slightly different. The pre-approval process means that we've already reviewed all those documents and you're good to go. So as I said, get those ready if you can, if you know you're going to buy here pretty quickly. Are the rates going up? They have been creeping up just a little bit lately. It's been a roller coaster every year for rates, as many of you probably know. So, it just kind of depends. It does seem as though the past, I would say maybe 2 weeks, they've crept up a little bit, but there's a lot that goes into your specific rate. Your credit report, your credit score, I should say, has the most to do with your rate. So that's why I said earlier, the higher your credit score is, the better interest rate you're going to receive. So if you're working on your credit, keep working on it. It's really just going to save you in the long run having a higher credit score with that interest rate. What are your requirements for rental property financing? Fantastic question. We do lend on primary, secondary, and investment properties. When you are buying an investment property, we follow Fannie Mae conventional loan guidelines. So the minimum down payment is 25%. I will tell you the interest rates are higher, being that it's an investment property, just a little bit more quote unquote riskier for lenders. So 25% is your minimum down payment, and just note you're probably going to have a little bit higher of an interest rate than you would on a normal first time, or I should say primary home. And I will tell you, we do offer, or Alltru does offer credit building. So if you are struggling with your credit, you're wondering kind of, where to go with it, what should I do? Go ahead, reach out to Alltru, give them a call. They can walk you through exactly what you need to do, or you can walk into any of their branches. They can help you as well. Credit, I will tell you, is it's about the most important thing when it comes to mortgages. So never be shy to work on that. Do you offer first-time home buyer program? Great question. So the first-time home buyer program is conventional. It's a conventional loan. The minimum down payment is 3% for your first-time home. Now, conventional, if you are not a first-time home buyer, the minimum down payment is 5% of the purchase price. So it just saves you a little bit on that. That's the best one that we offer. It's, as I said, conventional. It's just the Fannie Mae standard first-time home buyer. And I should also tell you that you are considered a first-time home buyer if you have not owned a home in the past 3 years. So if you sold your home 7 years ago, you can technically be considered a first-time home buyer again. And then your minimum down payment, as I mentioned, is 3% rather than 5%. Well, thank you all again so much for joining. We really, really appreciate your membership, and looking forward to working with you. As I said, don't forget, if you're looking to go ahead and apply, give us a call. Even if you're not looking to apply, as I said, give us a call. We'll answer your questions. We can help you build your credit, whatever that might be. Okay, I don't see any more questions. If nothing else, you all have a great evening, and thanks again. Looking forward for the next one.